Okay, guys, so most of you trade worse than a goldfish, and do you want to know why? Well, first off, fish do not overthink things, and fish do not trade emotionally. That is why multiple studies have shown that just randomly picking stocks with a dartboard or having a monkey do it is better than trading like the average person. Do you ever wonder why you buy a stock and then it goes straight down, or you sell a stock and it seems to go straight up? Well, that is because the market kind of works to play off your emotions. So whatever you think will happen, it normally does the opposite. And today I'm going to show you 3 things that literally a 4th grader could do, and you will instantly trade 10 times better, and maybe, just maybe, you will trade better than a goldfish. And if you don't know which video I'm referring to, check it out in the description. It is hilarious. And the first rule is don't go down. So do not ever hold a stock past 10% down. And I can already hear y'all going crazy. What do you mean? Like stocks are at such a great deal right now, and I got to buy the dip and all this stuff. Let me tell you, if you buy a stock and it goes down 10%, you were either wrong on the stock or you were wrong on your timing. So do not ever hold a stock more than 10%. This should be your maximum stop loss whenever you buy a stock. Now, the reason this is compounding losses will absolutely kill you. I want you to look at this chart real quick. If you take a 5% loss, you need a 5% gain to break even. Pretty easy. 10% loss, 11% gain to break even. Not too bad. But past this, it starts to get bad. Now, if you take a 50% loss, you now need a 100% loss to break even. Heaven forbid you take an 80% or a 90% loss. Look at these numbers you have to do just to make up for that. That is insane. And yes, cutting your losses at 10% will make you miss some trades, but it is absolutely worth it in order to miss these kind of losses, because when you take a loss this big, you cannot recover from that. And another huge reason why you should always keep your stops at 10% or less is because of this. Big dogs like to sell you trash stocks on the way down. They will convince you that it is cheap and you should buy it, and then they will leave you to hold the bag. Let's look at Netflix. I mean, this is a reputable company, been going up for multiple years, and it dropped down to $600. And this is when Jim Cramer said, hey, you need to buy the stock. It is cheap. And what happened? It managed to go down 70% in a few months. You got absolutely clapped if you listened to CNBC and you bought exactly all that kind of BS they were selling you right here. But like I said, it looks obvious right now, but if you look back at it, you would have thought, man, this is a good deal. This is why you do not hold past 10% losses. Rule number 2, only go long when the NASDAQ's 10 simple moving average is above the 20 simple moving average. So if we were using this rule, we would be in all the way through this huge move. We would have been out right here. As soon as that 10 SMA went below the 20, we were gone. You would have missed this entire crash and then gotten back in right here. Guys, this rule is so simple, but it could literally make you millions of dollars and save you millions of dollars. I mean, this is incredible. You would have been in for the whole huge move right here. Now, you might be asking yourself, why doesn't everybody do this? Well, it's because the big dogs who are trading with billions of dollars, they cannot get out that fast. This is them trying to get out in time. But you have a small account, you can get out almost instantly. And so you can save yourself all this pain and then just sit on the sidelines, and as soon as the market looks good again, hop right back in. And here's an up-to-date chart as of the end of May 2022. As you can see, this rule is so overpowered. I mean, you would have got in right here, been in for this whole move, sat out during this down period, got back in right there, caught a huge move, sat almost all of this out, and you would have, like me, I hopped in right back here, and in the middle of a bear market, managed to catch some pretty good moves when that 10 crossed over the 20. And currently, you would have exited right here, and you would still have missed this entire downwards move. And who knows how long this could go? It doesn't even matter. Who cares? But as soon as that 10 crosses back above that 20, we're hopping right back in and juicing the market for all it's got. Even if you don't do much trading and you're more of an investor, this can save you a lot of pain. Trust me, just try it out for yourself. And lesson 3, this was the hardest one for me to learn, and it cost me a lot of money. Do not use options. Now, this is pretty easy to to get your head around once you understand that losses chart from earlier. It doesn't matter how big your wins are, the losses are so much bigger. And so if you take a 70% down, you now need, 300% just to make up that loss. Also, you don't understand these. Don't even pretend like you do. So do not trade options, especially if you have no clue what these means. These are they're just begging to take your money. So stay away from options. You don't need to have them. You can make huge gains without ever touching options, and the best traders never touch this anyway. All right, so that's the 3 rules I got for y'all today. Very simple, but it's very hard to follow. It takes a lot of discipline. So hopefully you guys can apply these and save and make some money. Anyways, I'll see you guys next time. If you have any questions, leave them in the comments.